The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the May 18th magnificent Monday edition, well, hour 2 edition of the Trader's Edge. I'm your host, Steve Rhodes, and hope that you're off to a great start of your day. Let's make sure that you and I, we do everything we can to have an extraordinary day. Of course, let's always remember what's talked about. Well, that's a dream. What's envisioned is darn right exciting. Of course, what's planned becomes possible. What's scheduled is real. And I want to really thank you for scheduling your time with me here this morning. I'm honored by your presence. I'm here to serve you. So feel free to pick up that phone, dial in at 877-927-6648, or internationally, you can reach out to us at 727-445-1044. Remember, if you've got a question, thousands of others have got that exact same question. So go ahead, call it in, a random act of kindness. That's the way to kickstart your magnificent Monday. That's the way to kickstart the week out there. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading off 12 points. She's trading out at 18,259. S&P is flat. It's off 91 cents right now at 21.21. The composite is up a point at 5,049. Russell 2000 up about 3 points this morning, trading at 1246. The DAX is on fire here, up 111 points this morning, trading at 11,557. The gold is flat. Silver is flat. It's up 9 pennies. Light sweet crude is flat, trading down a penny out here. To the upside, you've got Priceline Group up 12 bucks. Ann Inc. and Taylor Stores. That's a buyout with. I forget the name, but in any event, nice little premium in the equity this morning, 20% premium. Agios Pharmaceuticals up 5%, up $5. Precision Cast Parts up $3. Skyworks Solutions up 3%, $3. Netflix up a couple bucks. You've got Altera Group up $2.50. Chicago Bridge and Iron up $2.60. Clovis Oncology up about $2. Calmaine Foods up a couple bucks as well. To the downside, 11 Biotherapeutics. That's off 72%, down $8 and change. Google's off $4. China Mobile down $3. BHP off about $3. Green Mountain Coffee Roasters down $2.50 out here. Kite Farm off a couple of bucks. Amazon off a couple as well. Let's start off the day by taking a look at what's going on inside the ETF structures for the indexes out here. Let's start by taking a look at the QQQ series ETF, up 10 cents, 3.4 million shares so far today. What do we know about the Qs? What has it done thus far? The Qs have a swing point out here from May 6th that has 149,000 shares out there. Oh, I'm on light sweet crude. Let me, what the heck am I talking about? Come on, do me a favor, switch. There we go. Now, did make sense. We'll take a look at it, did it? Now let's take a look at the Qs out here. Sorry about that. The Qs are trading out at 109.47. What the Qs here did on Friday, they got up towards their point of control, their market profiles. That was at the 110.04 level, got up to 110.01, trading slightly lower this morning. No real volume in it on Friday, which was interesting. 24 million shares. The swing point out here, which did it touch? Let's see. The low of April 27th is 110.02. It got to 110.01. Missed it by a penny. Was 23 million shares going into 31 million shares out there. Normally, you stop right below it. You camp out. You have a weekend. Things kickstart and simply move all the way to the upside and go test that level. Nonetheless, we don't have any kind of bearish reversal signals or anything along those lines. So very possible for the Qs to get up and test that April 27th area between the price levels of 110.02 to 111.16. We go take a look at what's going on inside the Russell 2000, the IWM. That's trading out at 123.75. Volume so far today, 3.9 million shares inside the Russell 2000. What is it doing? Well, it has actually been able to close this little gap, this little downdraft from April 30th that had 72 million shares. Nonetheless, it closed it with 23, 22. Today's got 4 million shares, as I say, but we've only traded for about 45 minutes of the hour out here. The IWM was unable to bust out the lows. That was the March 10th swing point that had 32 million shares. The last test of that swing was on May 7th with 29 million shares. This does say that the IWM can come all the way back out here to the highs. That would be the, give me a moment here. That's the trading session from April the 15th. I was just trying to get the retracements here, but I guess I was a little bit too much of a lag time out there. The IWM ought to at least get up to 124.50. That's your 0.618 retracement level. That's what's going on inside of the IWM. Could easily try and bust it up all the way to the upside, the 127.13 area. If we take a look at the SPY out here, the SPY down 9 cents, no big deal, 13 million shares behind its move. Now, what's interesting here inside the SPY is it actually closed above its swing point with volume last week, and it did it both on a daily and it did it on a weekly basis. The weekly, the weekly and daily price points are going to be the same. That's the 212.24. Let's look at the daily. 73 million shares on February 25th out there. To my recollection, February 25th is not any kind of a holiday out here. So February 25th, 212.24, and that was passed on Friday with a close above. It was 76 million shares. 76 million shares, took out 73 million shares. You have a confirmed A to B equals CD to the upside inside of the SPY. Now, we've also got this key reversal session out here. That's from the day of April 27th. That had 79 million shares. That high was 210.54. The actual close on Friday was 212.44. So you've got a close above a key reversal session out here. Again, 212.48 was the high. The close was 212.44, off by 4 pennies out there. Now, volume was similar. But any close above that key reversal session out there, that then says that price can either move into the top of the rising price channel. Let's do this here. Let me put this on a weekly basis. Let me pull it back for you, just so we can see what we're looking at out here. So that's the rising price channel. It takes you back into where? Into 2009. All right, so that's a 2009 rising price channel that you're taking a look at. So that's what that top line on the yellow looks like. Let's go back to the, well, let's stay on the weekly. I'll go back to the daily in a moment here. But if we take a look at the weekly swing point, which was the week that began February 23rd out here, the interesting thing is that had 400 million shares. And last week, you closed just slightly above with 462 million shares. It does got to make us say, something to think about. Now, will price make an A to B equals CD to the upside? I don't know. I don't know. But will it run into, if it does, will it, well, where is its next move as long as it can stay above that 212.24 area or 212.28? Says you at least ought to go test the top of that rising price channel out there, which has acted as pretty good resistance when we take a look at the SPY out here. Right now, today, that's at a price point of about 215 and change out there. So that's what's going on inside the SPY on the weekly and really on the daily chart as well. The key level here really for the SPY is going to be 212.48. Any close above 212.48, old resistance ought to become new support, meaning 212.48. That's what's going on there. We go look at the Dow Diamonds. The Dow Diamonds here, they're trading off 17 cents. They're trading out at 182.31. You've got volume of 684,000 shares. What did it do last week? Well, if we take a look at the Dow Diamonds, the top of its swing point was from March the 2nd. That top, 182.68. The actual, what we've done today is you've gotten up to 182.65. Still have not been able to bust above that even by 3 pennies. It needs 4 pennies really to do that out there. The volume that it's going into on that trading session from March 2nd is 3.2 million shares. On Thursday, you did 4.5. On Friday, you did 4.9, I'm sorry. 4.9 on Thursday, 4.5 on Friday. Remember, that's going against 3.2. So you're moving into a swing point with volume. Only if the Dow Diamonds close below 181.37 would you have any kind of a failure. You're pushing into a swing point with volume. Says that that top ought to be tested. 182.68 is the number out there inside of the Dow Diamonds. That's what's going on inside those 4 ETF structures. Let's go take a look at just a follow-up from our number 1. We were focused on the 120-minute time frame charts out here. For the ES Mini upper left, the NASDAQ futures upper right, the Dow futures lower left, the Russell 2000 lower right. What we can see here on these 120-minute time frame charts is that basically the resistance level inside the ES Mini has held. That's in the 2120 area. Inside of the Dow futures, the 18249 is held as resistance. Inside the NASDAQ, NASDAQ is actually squeaked just above 44.89 as we came into that first close here, that first 2-hour close, which was right at 10 a.m. But at this stage here, we're seeing price pull back. I really believe NASDAQ, the NASDAQ 120-minute chart is a place for us to get our cue from as to what the markets want to do. We can see the other three contracts, they're into resistance, just as really. Now, those are resistance up at the upper boundary range versus the NASDAQ, which is dealing with resistance at the lower boundary range out here. This is going to be the chart that provides us with our messages, what the markets actually want to do. If we go take a look at what's going on, we took a look at the ETF structures. Let's go look at some things here. We'll look at the currency pairs. Where's the headwind out here? Well, you got the headwind, excuse me, is inside the euro, Japanese yen. This is now starting to pull back, not exactly in earnest, but it is starting to pull back. You actually could have a bearish reversal signal today, a bearish engulfing candle. That's with any type of close below 135.95. You're trading 135.88 as we speak right now. If we go take a look at the euro versus the U.S. dollar, that is pulling back, and looks like this is going to come back and try to test the breakout area of that descending price channel out there. We saw a break above it last week on Thursday and Friday, confirmed it on the weekly. Now price is coming back and testing that area. It will be a false breakout to the upside if we see price get back inside the descending price channel. That's taking a look at your euro versus the U.S. dollar. If we look at the Japanese yen. Japanese yen trading sideways to slightly higher, though, this morning, but it's been trading sideways really for over a month, nearly 2 months now, just a sideways movement inside of the yen. Dow's off 17, S&P down 2, about 1. Composites off 2. We'll be right back, folks.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 11 points. S&P's off a point. Composites off a couple of points. Russell's up 0.4% out there. We took a look at the currency pairs. Not really much going on in gold and silver. Let's take a look at them. Gold's up 30 cents out here. Gold just struggling to stay above 1224.50. That's the swing point. Excuse me, from back on April the 6th. Any significant close above 1224.50. And then you've got at least the completion of the 1-to-1 A to B equals CD, which is 1250. I would say more than that, you'd have a real breakout underway. 1272, 1301 becoming your price targets out there. That's on gold. Silver, as we mentioned, it's flat. It's up 11 cents. Silver is completing its 1-to-1, or has completed its 1-to-1.618. A to B equals CD. The upside, 1765 is the number. You're trading at 1765 right now. A continued move north. There's no bearish reversal signal here on the daily chart. Says price ought to make it to the 1808 area. If we take a look at light sweet crude, what is it doing right now? It's off 10 cents, trading out at 60.44. Just really finding resistance out here at that little shooting star. That is the area that it's got to take out, which is the high of 63.62 from May the 6th out there. That's really resistance. Been consolidating here for the most part since April 30th between this 59 area, up to about 62. Not a lot going on inside of light sweet crude. Let's take a look at the ETF structures out here. Let's look at the XLK, the ETF structures, I should say, for the S&P 500. Get some type of feel. We took a look at the XLF. During the first hour, we noticed that the XLF was moving into its swing point with volume out there. We began taking a look at Goldman Sachs. Let's take a look at what the XLK is doing. The XLK has a swing point from back here on March the 2nd. There were 6.8 million shares out there. The first time up into it was with 9 million shares on April 20th, but still couldn't close above that level. Well, on Friday, you got into it with 8.4 million shares. Did not close above that 43.46 area. You're coming into that swing point with volume, says that the high ought to be tested again. It's not been tested yet today. Only if you get a close below the low of that swing point, which is 43.10, would it suggest anything other than coming in trying to test that 43.46 again. If you get a close above that, then you've got a confirmed A to B equals CD to the upside. Nothing really bearish about the XLK as we speak at the moment. If we look at the XLV, the healthcare sector out here, the XLV up 11 cents, 74.36 is what it's trading at. It's got a swing point from March the 20th. The bottom is 74.48. We have not seen price hit that other than back here on the trading day of April 23rd, and that was hit with volume. Says that price ought to be back up there. Well, now we're going to get that chance. That chance meaning We're going to be watching the swing point low. That's at 74.48. If you can close inside 74.48, well, actually, it looks like we've tested that here. Let me see. The actual high today, 74.48, right there to the Centola. So 74.48 has been hit. So far today, you've got 900,000 shares, an hour of trading. That could be saying that this area here is being hit with, no, it's being hit with light volume. Even on a straight line basis, right? You could take 900,000 shares. We'll call it a million, just to bend times 6.5. That's only 6.5 million. So now the XLV is starting to move into that swing point with light volume. However, close above 74.48, and price should go visit the top, 76.01. It most certainly can do that out there. Doesn't have to, but it can. Energy sector, next one up on our list out here, the XLE. Of 28 cents this morning, 2.5 million shares. What is it doing out here? It's just resting. Not doing a whole heck of a lot out here. It ought to find some pretty decent support, either between 78.97 and 77.95. That nice little breakout bar on March the 18th out there. That's what's going on inside of the XLE. If we take a look at consumer discretionary, the XLY, it is basically flat. It's up a penny, 952,000 shares. Running into resistance of its TAS market profile box. It's also got a swing point that it's hitting from April the 28th. The low is 76.13. The volume there was 5.5 million shares. You've come into it today. You got to 76, 77. So you have not hit it. You've missed it by 10 cents so far. 6.9 million shares on Friday. You moved in with 7 million shares. Didn't get up to it, but you're moving higher with accelerating volume compared to that swing point out there. But no real test of that swing until you get into the price level of 76.87. Nothing bearish really about the consumer discretionary, just kind of ho-hum, resting at these highs out here in this market that looks like it is set on moving sideways, at least today. Moving sideways. That tires me out. Does it tire you out too? Right now, the Dow's off 9, S&P's down a point. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up a point. S&P is up 60 cents. Composites up a buck. All the markets are just slightly green, with the exception of the DAX. A quick check-in on the DAX. That's up 102 points out here. And the DAX just still continuing to trade inside of really two trading ranges, a rising price channel. That's the longer-term one. That's the one that's in place here since October of 2014. Those are the yellow diagonal lines going across my screen. But you can see this little subcorrection price channel. That price, and those are the red lines out here. So until the top of that descending price channel gets taken out, you have to assume that price is going to gravitate towards the bottom of this rising price channel out here, and that's inside of the DAX. So we don't need to get carried away with it being up about 100 points out there. Over the past couple of weeks, a number of people have sent me emails about the NYSE margin debt out there. And so, I started doing just a little bit of reading on it. And, you can find all different kinds of charts that take a look at the NYSE margin debt out there. I mean, you can, there's all kinds of information. You can take a look at things that are adjusted for present day values. And, most times the stuff that I read, it just seems like what you can't tell is whether they're usually they're trying to prove a point, right? I mean, that's why people do things. Now, what I try to do when I take a look at some of those things is just try to say, can I find something in common? Now, the primary questions here, I apologize if people have been sending me the undertone seems to be that this market is just going to croak. That, margin debt's at the all-time highs. It's been growing rapidly. And this market is just getting ready to just a huge bubble out there. Now, and so you want to understand, whether that's really the case. So when I take a look, this is kind of an interesting chart out here. I'm going to have to do more work on it. So, and I'm not really trying to prove a point. I was really just looking for patterns. I've got the debt. This is a monthly chart, by the way, that we're taking a look at. So I've got the debt. And I just took a look at it as a way of a ratio of its percentage growth compared to the New York Stock Exchange out here. And what's kind of interesting that I found, the black line that's going across the bottom of my screen out here, that's the correlation between the margin debt and the price of the New York Stock Exchange, just so you know what it is that we're actually looking at out here. And so it's in just maintaining that price correlation by month. Now, I've only had this through March because the April data has not been provided. But when it does, I'll go ahead and do it. What I found that is of interest out here, really, is that when the market made its top back in 2000. The top in 2000 more easily identifiable when we take a look at the at the NASDAQ Composite, but this is New York Stock Exchange margin debt. So we got to really keep things in perspective here, and we're really comparing it to, people will take a look at the S&P 500, they'll take a look at other things, and I'm just kind of like, well, why? Why don't you kind of keep things the same out here? So when they do keep things the same, I'm sure they've got good reasons, just not reasons that I understood. What I find here with regard to the margin debt is that these two big tops that we made, which is 2000 and 2007, the very last phase out here, I think our man John in Philly will like this, this last phase out here with regard to the tops being former when margin debt really grew at a significant rate in a very fast period of time, and had just simply that, look at that acceleration from back here in what basically is what, I guess that, what was that, 1998 to 2000. Just take a look at that rapid acceleration in margin debt with regard to the price that was going on. Take a look at that same thing back here at the 2007. So we're looking at those red lines to the on the bottom portion of my chart. And guess what? We're really nowhere near that. The question would be is not like we saw there. So from my standpoint, for those of you that want to follow margin debt, and unfortunately, two examples is really a horrible. It's a disgusting sample size, right? But I'm looking for patterns that are out here that were prevalent. And we certainly don't have that same pattern that is in place right now, which is this huge acceleration, last phase of the market out here. So anyways, for those of you, so I sent emails back to those folks and said, hey, I've done this chart here. I'll share it with you during the second hour of today's Trader's Edge show out there, just to give maybe a different viewpoint on margin debt as it relates to the New York Stock Exchange, and trying to find a pattern there that is affiliated with substantial, significant tops out there. And what that then does is that then says that when you take a look at that, or at least when I take a look at that, versus what's going on the monthly charts for, let's just take a look at the New York Stock Exchange. If we take a look at the New York Stock Exchange, we keep things kind of all relevant here. What you and I know about the New York Stock Exchange is the following. Number one, there's been a 11-year consolidation pattern inside the NYSE that ranges from about the 40,200 level to the 10,380-ish area out there. So you've got 6,200 point range. You've broken above it, 10,387. That says that little phase transition, or that little ramp up that we saw in margin debt, probably is when you would actually see the New York Stock Exchange get up to about 16,000 or so. Now, doesn't mean in between now and then we don't see corrections and things of that sort, because we do. But I can tell you, you've got a measured move consolidation breakout inside the New York Stock Exchange, and that's what its price projection would be over the course of the long haul. If we take a look at where we're at right now from a monthly start out here, oftentimes when you see significant price tops like we did back here in 2007, or anywhere inside the market, whether it's you'll see it on a daily, a weekly, or a monthly. See it on a monthly, it has a ton more meaning than daily, and certainly more meaning than weekly. But you'll get some type of bearish reversal signal out here. You get price moving higher with less relative strength, as it did back in October 2007, followed up by a bearish reversal signal, bear sash, bearish engulfing candle. We don't actually have that in play right now. We do not have that same pattern that is in play as we take a look at the New York Stock Exchange out here. So pretty good chance it's only in its third leg to the upside. That says, if you take a look, if you count the waves from a Chapman wave perspective out here, I'd have to say more likely third versus the fourth out there. So all things look pretty good when we take a look at the New York Stock Exchange, with the exception of it running into resistance. We looked at this earlier this morning. We'll look at it right now. For those of you that didn't get the first hour of the show, we'll put that up on here, and we can see that another horizontal. So market's going to do one of two things, right? Move sideways, horizontal. We're going to either move up, down, or sideways. And sometimes they're doing sometimes they're doing two out of those three out there. And if we take a look at the New York Stock Exchange, now this is taking a look at the horizontal trading range boundary lines out here. We can see that it's got some significant resistance in this 11,000, 370-ish type area out here, that it's got to clear that level of resistance resistance in order for it to really make its next move higher out here. So we're in the unfavorable seasonal cycle. I expect it's going to struggle to really take out these areas of resistance up until maybe into the Santa Claus rally time frame of next year out there. So let's take a look at the New York Stock Exchange. If we go take a look at the Dow from where we're at on the monthly basis out here, if we take a look at it, the horizontal trading ranges on it actually suggest that price inside the Dow wants to get to 19,102. So that's going to make this unfavorable seasonal cycle really interesting to watch and see how this plays out. Now, any type of pullback inside the Dow, these are the longer-term trend lines that you're looking at. You got horizontal and diagonal. With regard to the diagonal, I'm just paying attention to the white line right now, and that's the one that if we start back here in October of 2011, you use that low as your touch point. You use the November 2012, and then that takes you right into the October 2014 area. Any type of pullback inside the market ought to find really good support at the top of that trend line. If that fails, then that says that you can move down to either the 17,054, which happens to be right now, if it were to occur this month, really the intersection of a horizontal trading range line and that diagonal trend line out there. Otherwise, if that area fails, 17,056 ought to be a level of support inside of the Dow. If we look at the S&P 500, again, on a longer-term basis, on a monthly, just to get a feel for what's going on here. And we'll go switch back to the monthly price projections out here. Inside the S&P 500, you can see if we do the same types of things, we look at trend lines, just simply coming off of the March 09 area. That's the blue line on my screen. Your next touch point being October of 2011 out here. We can see that we're way away from that. And then if you use October of 2011, and then you can see how the touch points here of November 2012 and then October 2014, how prices held that longer-term trend line out here. Inside the S&P 500, it on the monthly basis, when the month is not over, but closing above 2,090.50 out here, bodes well for the message that price wants to move higher. Again, it's going to be interesting to watch this unfavorable seasonal cycle out here. Can it hold this 2,090 level? If it doesn't, price probably comes back and tests the top of that little trend line, that white diagonal line on my screen out here. This month, by the way, it'd be right around the 1971 area, but that's not where we're at right now. Whoops, so that's what's going on inside. So we took a look at the, we didn't look at the composite, though, did we? Let's do that anyway. COMPQ, if I did it. I got to type it in correctly for you in order for you to see it, though. If we did, my apologies. We'll go hit it again. Inside the NASDAQ composite, you can see right now, really right up against resistance out here. A lot of folks are saying that, it's coming back and hitting this 51.32 level, and that's where things are going to fall apart. And they may be right. Maybe price spikes 51.32, but on any monthly basis, any monthly close of a 5,077 out here, more likely what you're going to see, which we have not seen yet, is actually a price move up to the next range, the next horizontal trading range, which is really 58.23 out there. And so if we go back and we take a look at the S&P 500 here on the monthly, what we know is we've got this nice little 800-point consolidation breakout. Says you got a price move to 23.50. Take a look at the monthly chart out here. We've got no price relative strength divergent pattern. You've got you've got price that is closed above the resistance of this little evening star pattern that formed out here inside of this monthly chart, which was the months of November, December, and January. And then as soon as we saw it close above the December high, which was 209.355. You're at 21.23 right now today. Old resistance, which is what the top of that should become new support out here. And where are we at inside of the S&P 500? We probably also are only in that third leg to the upside using the Chapman wave counts out here, but we'll see. Time will tell. Nonetheless, 2350 still remains its target area, and that's taking a look. So we took a look at the New York Stock Exchange, the S&P 500. The composite's already completed its price projection, as has the Dow. So now with regard to where things are going, we just simply take a look at these horizontal levels to give us an idea as to where price may run into resistance out there. So that's longer term. If we come and take a look at what's going on today here inside the New York Stock Exchange right now at 1047, it's actually sellers that are flexing their muscle out here. I say that because the price oscillator has dipped just below the zero line. Our reading here, minus 2.35. Any close below zero says that sellers are actually in control of the market. What they can do with it, that's another thing. But we're up towards all-time highs. You know, will we start to get some type of trend that takes place for a number of days out here? I don't know. I think we will, but number of days, my number of days may be totally different than what you're thinking as number of days. It's the New York Stock Exchange right now that's the only one that is showing any kind of real weakness with regard to the price oscillator being below zero. We're positive in the composite. We're positive inside of the Dow, so everything there looks to be okay. If I look at the VIX index here, what's interesting about the VIX index, two things. One, it's trading below the 50-day exponential moving average. That is priced out at 1401 right now, but it's trading at 1305, and it is you know, above the. It's trading up a bit here this morning, but still, as long as it stays below 1401, the markets do one of two things: they move sideways to higher inside, and that's what we've got going on inside the markets right now. 1401 becomes an area to be watching. If you close above that, then that's going to say, uh-oh, maybe that trend that Stevie's expecting is going to start to take hold here, whether it's today or in the next couple of days. But so you'll want to watch that. The VIX still has a slightly rising trend line. The actual low from April 23rd in the VIX was 1212. The actual low from Friday was 1235. So we're still just slightly making higher lows inside of the VIX while the market has been making a gradual move higher out there. So this chart looks, says caution. If we look at, so that's the summation index, that's the VIX, that's the longer term charts out there. And again, the other headwind that's in the markets right now today happens to be the euro, Japanese yen. Excuse me, trading down just slightly, nothing huge out there. Nonetheless, still a little bit of headwind. So we've got the Dow off 14, the S&P is flat, the composite is flat, the Russell 2000 is flat out there. So it seemed like a good use of our time to take a look at the longer-term picture, just to give us a feel as to what's going on in the long-term range inside of the markets. This is Steve Rhodes with TFNN. I'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow is off 18. S&P is flat right now. Composites off a point, so no big deal out there. I had a couple of emails come in during the show asking me if I would take a look at the natural gas contract, where that is likely headed to. So let's go take a look at the June contract here for nat gas. We know that natural gas, from a seasonal perspective, makes a low in the April time frame out here. Typically, this low came in on April 27th, and then it runs into the middle of June. What we've gotten here, we've had a completion of the 1-to-1 A to B equals CD. So off of that, the April 27th low as your A point, your B point out here on May the 4th. That was at a price point of $2.82. A little retracement for about 3 days, 0.32 retracement out here. So not even a 0.318, 38, not even a 0.382 retracement. So it says a really strong move is underway inside of nat gas. Now, what it did, the actual price projection, 305 is your 1-to-1 A to B equals CD. The actual interest session high, 3.048. So that qualifies as 3.05. Now, A to B equals CD patterns, they only complete a 1-to-1 60% of the time. The question is this going to be one of those other 40%ers, meaning that price moves up to 315 and or 327 out there? And I would have to say the answer to that question, with the information that we have and the evidence that we have right now, the answer is yes. We don't see any kind of reversal signal, so to speak. We did get a little doji candle. It means the market is tired. It was up at a resistance area, which means it was making a 100% move. That's a normal place for a doji to show up. It's where traders are uncertain, so there's some uncertainty with regard to natural gas. But at this stage here, short of a bearish reversal signal here, the next move inside net gas ought to be to the $3.15. So always remember, 60% of the time is when the market completes a 1-to-1 A to B equals CD to the upside out here. So it's possible that it's completed, but we don't see any kind of bearish reversal signal on that daily chart out there. So just says you have to stay patient and use stops out there if you are trading natural. Well, if you're trading anything, quite frankly, just always use stops. The other question was if I would take a look at some of the gold stocks out here to see how they are behaving or misbehaving. So let's go take a look at Rand Gold. That's up 85 cents. Rand Gold's got 179,000 shares in it. Rand Gold is dealing with this swing point from April 29th that has 1 million shares. You've gotten up into it with light volume, 584 a couple days ago, 507 on Friday. Today you've done 179,000 shares. It's not showing the get up and go gusto to break out. If now, I think that the mining equities have been stronger than gold, so they've been leading the way. Well, if they have been leading the way in the case of Rand Gold, one of the leaders out there, guess what? It's not showing us that it wants to lead to break out of April 29th. So that makes the move in gold a little bit suspicious. If we take a look at Gold Corp, GG, up 22 cents, 1962 is what it's trading at. Volume today inside Gold Corp, 2 million shares out here. What's it doing? Gold Corp unable to break through its supply line that was established between a price level of 2003 to 2046 out here. So it's not showing any giddy up and go. The one that is showing giddy up and go is Barrick Gold. ABX, that's up 22 cents. That's got 2.3 million shares. This has been strong out here. What is it doing? You know, good question. Where's this thing running into resistance? Well, really, if you take a look at Barrick Gold, you've got really this like consolidation in the area that it's at right now, which is, you know, we'll call it somewhere around $13 down to about 10.35. So, you know, it's actually just trading into a potential resistance band. That is Barrick Gold. So, folks, Dow's off 27, S&P down a point, Composites off 3. Stay tuned because our man Basil Chapman is up next, and then it is Magical and Marvelous Monday. After Basil, we've got Larry Pesavento. Then we've got David White, the Tom O'Brien Show. Have a wonderful Monday, magical Monday, magnificent Monday, and I'll see you on Terrific Tuesday. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.